there is a lot going on. First, you have a lot of people who have gone bankrupt. So those are totally gone. Those are zeros
Sure.
when you add them into retail sales. The reported numbers from a lot of the big retailers have been superb. If you look at Target, Walmart, Costco, and Amazon, huge numbers. So it's kind of hard to get from those numbers to the numbers that we see from the government.
And this report includes non-store, i.e. online retailers. I could understand if it were brick and mortar, but it's not. It's supposed to, in fact, it's more than encompassing them all. We're also talking about autos, and auto dealers were actually a surprisingly weak spot in this report. And what's been happening with the auto cycle is a separate story, but one that still tells us something about the consumer, right?
Well, I think when you look at everything in aggregate, you could reach some following conclusions. Whatever the data says or doesn't say, this is what I get out of it. One, the gap between the winners and the losers is growing. And if you're a winner, you're doing great. And we've seen some spectacular numbers where people have made the investment they had to make, and they're growing. Right? The losers, they're in big trouble. They're going out of business. They're closing stores. A whole different world. Now, on the overall consumer front, the consumer was incredibly strong last year. And there's no doubt there's been some weakening, but she's still there. And she's still shopping. The only number you look at is kind of that auto sale. And the only thing I could think about, I was looking at that number. Keep in mind, the last week of January was the polar vortex, and a lot of people, unless you're from Minnesota like my wife, do not go out when it's that cold. I don't think you go out and go car shopping when it's zero.
Which is fine. And look, it's clearly a little bit of a fluky number. It's just, to me, it was interesting that it was revised down and not revised up. I thought for sure, okay, it's a big headline weakness, but once the full data comes in, and then that didn't happen. So then we turned the calendar to 2019. In some ways, we're off to the races again, even though the GDP number, again, for the first quarter doesn't look great. So is this because of the transformation of retail, that perhaps it's just something in the numbers is not being picked up?
I think there's a lot of change taking place, a lot of growth on the internet, a lot of growth in particular, even faster than the first party, on the marketplaces, on Amazon's marketplace. They grew like 30+% in the last quarter on the marketplace. Etsy, another big marketplace with a huge growth. See, Wayfair, some of these numbers are so huge that it's hard to believe that something isn't going on in e-commerce that isn't shifting things around.
So when we talk about some of the losers in retail, you mentioned earlier some of the big winners, but we've seen the bankruptcies of stores like Gymboree, which I think was the second time, Toys R Us, a lot of these leverage buyouts from years ago, which aren't panning out because they just didn't see this trend coming, which to me speaks to the idea you have to be really, really careful if you're going to go that route. Right. Who else do you think could be close to the line here?
I think anyone who's an LBO from that era is in big trouble. These deals were done. These are smart people, again, at these LBO firms. They were done at a time when these retailers were viewed as cash cows. It's almost impossible not to generate cash on the store level in retail. So these were cash cows that didn't require a lot of investment, could throw off cash, pay down the debt quickly, go public, and move on. Instead, what happened was the internet and the recession at the same time, you know, when you had that huge recession hit. And so these companies ended up to be way over leveraged. They had to spend a lot of capital on the internet to keep up and on stores to make them even better than before, so you'd shop there instead of the internet, and they didn't have the money.
I think about it now when they talk about how much dry powder private equity has. You know, they're probably understandably wary of where they're putting that to work.
Most of them won't touch a retail deal right now.
And that kind of makes sense. Jerry, thanks. It's good to see you.
A pleasure.
Jerry.